Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader, and welcome. What we're going to talk about this morning is the economic schedule for the week. Then we are going to segue over and into the futures markets to see what's happening over there, how we're poised to open. And then we're going to leave off with some members' stock chart requests, which is where I review the symbols that our members submitted for me to review. Now, I'm a couple of days behind on this, so I apologize in advance. But before we get to the charts, if I could ask you just to give me a like, a subscribe, a share with a friend, it really helps me out. And I thank you in advance for doing that. All right, let's begin with the economic schedule for this coming week. We have consumer credit coming out today, not a big market mover. Tomorrow, being Tuesday, the NFIB Small Business Index, that's a market mover. The 11th, the PPI, then on the 12th, the CPI. The PPI is the measure of inflation at the producer level. If it's hot, all eyes will be on the CPI to see whether or not producers are passing along increased expenses to the consumer. And finally, at the end of the week, we have retail sales and, of course, the CPI. Let's move on to the pre-market activity. Okay, we're going to kick things off with gold in the pre-market. This is a 4-hour chart. These will all be 4-hour charts. Members, I've posted in the members area the week ahead commentary, which does a rundown on a weekly and daily basis in some cases, our strategy for this coming week. We have a big exposure to the gold sector vis-a-vis the gold miners. A report was shared with me by fellow member Paul. Thank you, Paul. Some nefarious activity led by JP Morgan on the Comex, shorting silver, gold, etc. So you had a managed manipulation. The report stated a managed manipulation of the precious metals to the downside. Will it last? I doubt it. And you may be asking why. Why do I have the courage of my convictions that gold and silver will continue higher in the coming months? We have 22 trillion reasons and rising every single day with our debt in this country as to why gold and silver will proceed higher. So did I go selling my gold miners last week? No. We will be looking to add more when the opportunity presents itself. Now getting back to the chart. Gold. We were down. We just turned positive on the session. But you really can't buy it yet. Because on a weekly view, which I went over with members, we have very negative candlesticks. 2 sequential weeks of bearish key reversals and new weekly lows last week. So I anticipate that we're going to see some backing and filling here on gold. So patience. No rush here. We remain in the consolidation on a 4-hour basis anyway. We need to see a breakout. We have no breakout yet, despite the fact that we're closing up. Again, patience. Let's take a look at silver. And the reason why I'm paying attention to the precious metal names is, yes, A, we have an exposure to them, or we're looking to open up a new position in the case of silver. But today, the Queen of England, the sovereign, has the ability to checkmate Parliament and allow for a hard Brexit on October 31st by not sanctioning the act of Parliament which postponed the Brexit. What does that mean? It means that gold and silver and the dollar are going to spike, right? Because they're safe havens plays. If in fact she does check Parliament. If she doesn't, well, then in all probability, you're going to see more weakness in the precious metal names. And I still think that the dollar behaved poorly last week, and you probably see the dollar pull back as well. We'll go to the dollar in a moment. Silver up on the session, no breakout yet. We have the potential here for a head and shoulders setup, left shoulder, head, right shoulder forming. Here's the neckline. Just be careful with silver. It's up right now. You don't know what these banks are going to do, especially JP Morgan. You don't know what they're going to do. Are they going to manipulate paper, silver, and gold lower? Or are we done seeing the manipulation? Not quite sure yet. But understand what's going on with gold and silver right now. Let's take a look at the U.S. dollar. The dollar opened up Sunday evening strong. But what I found interesting was that after the market closed on Friday, we saw big selling in the U.S. dollar, closing out the week at the lows of the week in the after-hours session. Something nefarious was going on in the currency markets. Now, fast forward to today, we are now off the session highs. We are retesting support at current. Now, you could make the argument that, you know what, Bob, what we're doing here is we're setting the stage for a pullback and a retest and a breakout on the dollar. Or if we break this support level here, we'll turn this red. If we break the support level here, we are probably going to go lower on the week. Now, what's my concern here? My concern is that we begin to devalue, debase the U.S. dollar. They won't call it that. They'll call it intervention or some sort of other verbiage, but it will be dollar devaluation. That will probably be the next strategic move in the trade war, is to devalue the U.S. dollar. And that will send gold and silver higher. Taking a look at some interesting currencies here. The Canadian dollar, 4-hour basis, is on a tear. On a weekly basis, it's on a tear. It's breaking out. Now, the key to remember with the Canadian dollar is that it's a commodity-based economy. They produce gold, oil, and a bunch of other stuff. So the Canadian dollar relative to the U.S. dollar is doing very well. Now, when I take a look at the Canadian dollar and I see it gaining strength, I also take a look at a comparable economy, which is the Australian economy. And as you can see, the Aussie dollar is on a tear as well. What does that tell me about these two economies? They are beginning to heat up. They're beginning to produce more gold, silver, oil, etc. And that is boding well for their currencies relative to the U.S. dollar, which is showing signs of weakness. So this is a tell. And what that tell might be, you may be asking, this is a tell that last week's weakness in the precious metals is short-lived, and you should expect to see higher highs in the coming weeks and months. Moving on to the S&P 500, we are up this morning just shy of a 0.25 percentage point. We're consolidating nicely here. We broke out last week on the S&P 500. I think that in all probability, we are going to challenge all-time highs in the coming days. Now, volume last week was very light, so just be forewarned. This is a very fragile market. One headline, one tweet can send it lower. The NASDAQ 100 up this morning by about 14 points. Again, we're consolidating nicely. We recaptured support on the NASDAQ last week. I expect that we should probably rally and challenge recent all-time highs in the coming days and weeks. Again, absent a geopolitical event. This is a very fragile market. Let's move on to our members' stock chart requests. We'll begin with Tesla, weekly basis. Tesla has been in a downtrend. It remains in a downtrend. The 290 level, which was critical support, failed. And we have been putting in a series of lower highs and lower lows. That appears to be abating somewhat. We bottomed out at 176.99, rallied to 266.07. We're now pulling back. We've consolidated, and we appear to be holding the 211.80 level. Now, would I be a buyer at these levels? No. We need to see a breakout above this upper band of resistance, because if we do not wait until we get that breakout, we're fighting the trend. And I may be a contrarian, but I still respect the trend when we are not at extreme oversold or extreme overbought levels. Make these shares prove themselves worthy of being bought. Volume to the upside has been very, very weak. Now, we have broken out on weekly RSI, so green shoots. We're starting to see good things happen here for Tesla. It's not enough. We are beginning to see higher lows on Stokes. It's not enough. Price matters. So wait for the breakout above this upper band of resistance. Daily chart. We're consolidating nicely. We broke out of a descending wedge formation. If you're going to swing trade this, I wouldn't swing trade it to the long side until we got an apparent close above the 230 level. But remember that you have resistance right at about that level. So a close above 230 would make this trade very interesting, but I would wait. Stokes are up above the 50 level, which is good, as is RSI. So the daily chart is looking very good. The weekly chart is improving some. So we're going to add Tesla to our watch list. Great pick here by Tom. Early stages of recovery here, I believe, on Tesla, but very, very early stages. No rush here. Microsoft, weekly chart. A beautiful setup. Let's throw some lines up here. All right, so on a weekly basis, we broke out on price last week. Stokes are hooking up higher. RSI hooking up higher. Volume is a bit light. So a weekly view, Microsoft is looking strong. We may get a pullback and a retest of the support level. On that retest, we may see some volume spikes because many technical traders may just be looking for that pullback and a retest of the breakout point. Daily view. So on a daily view, we remain in a consolidation. I think that these shares are a buy all day long on a close above 140 spot 38. I would add to the position on a close above 141 spot 20. Stokes are looking great. RSI is looking great. Another one that is very interesting to the long side. Great pick, Tom. The next chart up is Macys. And I have to say, I love Macys, and what I don't think is being spoken about enough in this country, and it's being ignored, of course, as usual, by the mainstream media, the financial news media elite, there is a depression in retail. I would challenge anyone to show me a neighborhood where you do not have retail closures in some form or fashion. Locally here in New York on Long Island, we have True Value Hardware, a real mainstay in the hardware business, going out of business after many, many years. They've been around much longer than Home Depot, and it's very sad. Macys is under threat here. Macys has a lot of problems. Now, this is a monthly view of Macys, so we're not even midway through the month. This could change dramatically. But last month, we smashed right through critical support last seen back here in November of 2017. Now, we did find support at the 1420 level last seen back here in August of 2010, and we reversed. The question is, do we hold the gains off of this support level, or do we give them up and close down below it? I don't know. I am not that smart. Now, we do appear to be, quote unquote, air quotes here, oversold, but we can go lower. We have the 50-period moving average, which is rapidly declining, and in all probability is going to take out the 200-period moving average, which on a monthly basis is seismic. We have the potential for a double bottom setup here on Stokes, but that assumes a shallow oversold condition. I would not give Macys that benefit of a doubt. The retail sector, the brick and mortar sector, is under a lot of duress. Now, this is the higher level view. From a short-term perspective, is there a short-term swing trade here? Maybe. We'll visit the daily chart. But remember, we closed out the week last week just shy of critical support at 1586. You need to remember that number, 1586. That is resistance. Daily chart. So on a daily basis, our indicators are rising, RSI, Stokes, but they're still down below 50. They're not as bullish as I would like them to be. Were they above the 50 level, the neutral level, I would be more optimistic. Now, in terms of price, we have rallied up and into resistance at 1575. Remember, 1586 is just above last week's highs. We failed to break out on Friday. In fact, we were rejected on Thursday and Friday at this upper band of resistance. Now, I haven't checked the short interest on Macys, but I'm confident that it's probably fairly high. So if you wanted to trade this to the long side, I would wait until we break out, get a pullback, retest this support level, and then open up a small position using a stop right below it. If we break back down below the support level in blue and we appear poised to close there, you need to stop out. Keep the loss very, very small. If we manage to rally up and through and we appear poised to close above 1586, I would add to the position. We may rally to fill the gap up at the $19 per share level. I wouldn't expect much more out of the shares of Macys. I would book those profits, make them real, and move to the sidelines. Now, prior to filling the gap, we would see some resistance right here at the August 14th highs at 1719. So just be aware that we do have sellers above. They tried to rally the shares on that day. They were rejected. Lots of sellers moved in, as noted by this volume bar. So be very, very careful here with Macys. It is not a favorite trade of mine. And unfortunately, were we, back to the monthly chart, were we to break the 1420 level, we would be looking to short the shares down to 12.76, and we'll probably break and go lower. I am not optimistic about the retail sector whatsoever. We're going to leave off here with MasterCard, weekly view. MasterCard broke out last week. Now, we may just pull back and do a retest of the breakout point at 283.33. That would make a great entry point because you could put your stop loss right below that support level and stop out with a small loss. If, in fact, we do fail to hold, RSI is rising. We did see higher lows in the double bottom setup here on a weekly basis. Volume these past couple of weeks has been very, very light. So just be forewarned. This breakout was not on institutional accumulation. Ultimate oscillator consolidating. We appear poised to break out. Stokes rising. MACD, potential lower high here. So MasterCard looking good. But I would be very, very careful here in that we are long in the tooth. And I would use a trailing stop loss order. If you're trading this as a momentum stock, keep your losses small and lock in those profits. And that's the value of the trailing stop loss. Daily chart, yeah, we're a bit extended here on a daily basis. On Thursday, we kissed the third standard deviation Bollinger Band in red. In short, we're not supposed to be there. I would wait for the pullback of the breakout point. I would not go chasing these shares. Back to the weekly chart. I would wait for 283.33, and that's right here. And I would buy that pullback with a stop loss right below. And that is it for today, folks. Please, if you get any value out of this video, please hit that like button, share with a friend, leave a comment below. I will get back to you. Everybody have a profitable trading day. I'll talk to you soon.